All right, let's go ahead and expand our accounting equation and then provide T accounts for the expanded equity section. All right, so we remember our expanded equation, assets equal liabilities plus owner's equity or stockholders' equity. We said there's 4. Maybe we should start with, we'll start with our 2. Remember there's 2, they become 4. So we have our contributed capital or owner investment, which for corporations we call common stock. And then we have our retained earnings. Retained earnings. Now we know overall, the normal balance is a credit for owner's equity. So anything that increases owner's equity will also have a credit balance. Common stock increases owner's equity, so it's going to share the same normal balance as equity. Okay, so if you go back and look, it's exactly the same. Okay, owner's equity increases to the owner's equity account go on the right or credit side. Yep. Okay, not too bad. What about for the accounts that make up retained earnings? Right? What about for those? So if you remember, retained earnings is made up of dividends, revenue, and expenses. Let's give each one of those a T account. Dividends and expenses decrease equity. So anything that decreases equity is going to have the opposite normal balance. So that means dividends and expenses are going to have normal debit balances. So if you want to increase dividends, put it on the debit side. Why? Because that's overall going to decrease equity, and we know that dividends does reduce equity. Okay, this is a lot coming at you. I totally understand. So take your notes, and then if it's too much to think about, decreasing, so it's on the opposite side, then just memorize it. It's not going to change. Okay, revenue increases equity, so it's going to have the same normal balance. There we go. So now we have expanded our accounting equation and given T accounts for each section of it. All right. I'll make it a little cleaner on the next slide, and then I'll give you a little tip to help you. All right. Assets, liabilities, and owner's equity. I'll just leave it at the 4, right? Which is your common stock. Dividends, revenue, and expenses. T accounts for all these lovely things. Okay, give each side its left side, right side, left side, right side. You'd be surprised how many times I give students quizzes and I see them write this at the very top before they get started because they just want to remember all their normal balances. Okay, so if you want to increase assets, that's on the left side, decrease on the right. It is opposite for liabilities. And then anything that increases equity is going to share that credit balance, credit normal balance. If it decreases equity, it'll have the opposite, or a debit normal balance. Okay, so there you go. I love that. That makes sense to me. Sometimes that is way too much for students, especially as we're starting out. So there's this fun little mnemonic I wanted to show you. See if it helps you. Okay, so the mnemonic is, after eating dinner, let's read comics. That stands for, The A stands for assets, the E, expenses, the D, dividends. And it's a way to remind us that assets, expenses, and dividends all have normal debit balances. The L stands for liabilities, the R, revenue, the C, common stock. And it's a way to remind us that these three elements have normal credit balances. Okay, so both of these items are saying the same thing. Assets, normal debit balance. Okay, common stock, normal credit balance. It's just I wanted to show you a different way to help you memorize the normal balances for accounts. Okay, because we're going to use this the rest of the semester, the rest of your accounting lives, and I'll just be using it as new language. I'll just say debit your assets, and you have to know, oh, well, then I'm increasing my assets, right? So get comfortable practicing with this, and I'll show you an example in the following video.